Welcome to today's Financial Market Digest by Forex Hub International. Starting in the U.S., the Dow Jones Industrial Average dropped by 398.51 points, or 0.94%, closing at 41,954.24. This marks its largest one-day drop since September 6th. The NASDAQ composite also fell, down 213.95 points, or 1.18%, finishing at 17,923.90. The S&P 500 followed suit, declining by 0.96% to close at 5,695.94. This downward trend was driven by investors adjusting to expectations of fewer rate cuts by the Federal Reserve and concerns over rising oil prices amid Middle Eastern tensions. In Europe, the DAX ended slightly lower by 0.09%, settling at 19,104.10, while the Euro STOXX 50 gained 0.30%, reaching 4,969.71. Meanwhile, the FTSE 100 rose 0.28%, closing at 8,303.62. Investors in Europe are focused on upcoming speeches from the European Central Bank, which could influence interest rate expectations. In Asia, Japan's Nikkei fell by 1.2%, closing at 38,861.09 after a stronger yen weighed on exporters. Over in China, the CSI 300 soared 6%, driven by stimulus hopes, while the Hang Seng index tumbled 5.76% as investors took profits. In Forex, the euro-dollar was steady at 1.0971, while the dollar-yen eased back to 147.65, pressured by recent strength in the yen. The pound-dollar was down slightly at 1.308 as investors reacted to comments from the Bank of England hinting at possible aggressive rate cuts. Turning to commodities, oil remains volatile. Brent crude was up 10% this month, reflecting the geopolitical risk in the Middle East, with prices hovering around $80 per barrel. Gold dipped slightly by 0.24%, settling below $2,640 per ounce as strong U.S. jobs data dampened hopes for aggressive rate cuts by the Fed. Looking ahead, today's key events include speeches from both the ECB and the Federal Reserve, which could have major implications for global markets, particularly in the bond and currency markets. That's your Financial Market Digest by Forex Hub International. Stay tuned for more updates and analysis. Don't forget to like and subscribe for the latest market insights.